Yo, what's good with y'all boys? Project RX here. Today I wanted to touch on a psychological lecture that I thought of while trading today, and it's just basically boredom. You know, we all get bored, right? We all want to scroll on TikTok. We all want to play game. You want to play game, I want to play game, but it's not that simple, right? Trading is the complete opposite of being stimulated. It's applied boredom to find the best setup, right? And we all fall short of this, right? The thing that I deal with the most within being bored is just trading within consolidation or trading within accumulation. It's the main thing I deal with. I've lost probably a majority or 70-80% of my trades just because I was not patient enough or bored enough to wait for a actual setup, or I was FOMOing into a trade. That's another story. So today I want to talk about when you're bored, your standards drop, right? When you're bored, everything drops because you want stimulation, right? We all want stimulation because this is the world we live in, right? There's this disease, literally a disease within zoo animals. That's called zoominoma. It's not called that, but it's called something, right? It's a psychological disease where zoo animals act in a certain way because of their entrapment, because they feel caged, right? When you're stimulated, your mind is caged, in a sense, because you're caging yourself through stimulation that you have. How that applies to trading is that when you're bored, you want stimulation, and stimulation that comes from trading is just through you entering. You're adrenaline, right? You want to enter, you want to overtrade, and that's the next point. Is when you're overtrading, it's a dopamine response. You're overtrading because you want stimulation. You want that hit of dopamine. And that's why you're looking at the charts constantly. That's why you want to go into a trade constantly. That's why you're not waiting for a trade that is appropriate for your standards. Because you're going into a trade expecting an outcome, anticipating an outcome that is a dopaminergic response. People get misconstrued what dopamine truly is, and it is a reward-based thing, right? But truly, it is the anticipation of the reward. So a lot of you are not structured within your dopamine response. So you're anticipating reward, right? That's not based upon your setup. That's not based upon your risk management or your strategy. But you're anticipating a reward based upon how you feel, based upon the feeling of wanting more, the feeling of wanting money. You feel like you want to trade all the time because you want that payout, right? And that creates unprofessional behavior, right? If you're trading because you're bored, you're an unprofessional trader because your psychology isn't correct in order for you to be consistent, right? I have not seen a trader that is consistent because they always get bored and they always trade. How can you be consistent with your risk management if you're bored and you're just trading and you say fuck it? You get me? Next thing is no setup equals no screen time. You should not be taking a setup within consolidation or accumulation, and this is probably the worst thing I've dealt with when I was first starting out and still to this day, where I will enter into a trade based upon accumulation or consolidation on a lower time frame and expect it to run, right? And this is why I had to kind of go up to the 5 minute, because the 1 minute was showing me all this volume, quote unquote, but it was just consolidation on the 5 minute or 15 minute, right? So that's what I mean. You have to be structured in your ability to be bored, right? And looking at the 1 minute, looking for setups, and viewing it as just scalping. Nigga, you're so bored. You just want to scalp, my boy, right? Come on, bro. I just want to explain for the new people my risk management and my strategy, just for people to understand where I'm coming from and understand how much I've changed throughout like this 7-8 month journey, right? So first thing is I try to go for 40 to 60 points. I don't try to go for anything more because usually that will hit. You know what I mean? 40 to 60 will hit. 120, that's only going to be in either market open or it's going to be in a different time frame, right? You know what I mean? So you have to understand the time frame that you trade on. The points are the same. It just looks a little different, but the points are the same, right? So my advice to people who are just starting out trading, like you're a beginner, like you know nothing, is try to get less points. Do not try to get a fucking reversal. I'm gonna reverse this trade, straight continuation, trade 40 to 60 points, and stop there. This will train your discipline. It will train your dopaminergic response because, oh, I want more, so I'm gonna overtrade here. No, keep the rule, right? I usually on prop firms I usually go for a 250 risk, so a $250 risk. Um, Usually people go for like 500, right? And that's for people who are literally like they know how to trade, like they know psychology, they know themselves, they know their discipline, they know their max drawdown, they know what time frames they trade, they know their strategy to a T, right? If you're just starting out, you don't know your strategy to a T. And I feel like I'm just starting out. So my advice to you would be to literally have MNQ 2 contracts and just try to go for 250, and then once it goes up like 20 40 points, like 20 to 10 points before your take profit, try to add on a couple contracts, try to add on 2, make that into 6. You know what I mean? And this allows you to one, be structured and be patient with size, because that's another thing, and also so that you are consistently adding on to your winners and you're either taking off or you're going break even with your losers. And that will allow you to have good structure and good discipline within your trading execution, right? Because it's not just about trading in general, it's about your execution when you're in the trade and when you're out of the trade, right? And also journal not just the strategy, not just the time frame, but the most important thing to journal is your risk management and your emotions, and why you happen to go off of your risk management or off of your emotions, depending on what has happened within the trade, right? That's just some things I wanted to tell beginners like yourself if you're watching this, so you can have more of a way to understand these things, and I'll try to go over it within trading view or trading in general. And if you do want me to make a video for beginner traders, please like and subscribe. And RX out.